Hello, everybody, and welcome back to another video from the Investor Diary. To tell you the truth, this is becoming very frustrating. The platform of recording and publishing here on TradingView. I mean, it is a rare circumstance where I record a video and it goes live just in one go. I need to do it two or three times because things go wrong. I just left the screen for a while and then the whole thing just went away. The page refreshed and the recording and publishing screen just went away. This is really frustrating. So I'm repeating the whole thing one more time, hoping that this will not happen again and hoping that people in TradingView will look into the publishing and recording platform to make things better. So, in this video, I'm going to talk about how things are progressing in my journey of educating myself on Forex trading. Now I'm back to the market structure. I went through a very long journey, starting with market structure and then uh, trying to find solutions to the win loss ratio that I was experiencing, the bad win loss ratio. So I went into trying to filter trades through RSI, stochastic, even the classical tools, but things didn't work out. And then I realized maybe it's not the market structure per se. Maybe it's my application, my understanding of how I'm applying the principles. So I went back last week. I'm not sure if it is last week or 2 weeks ago. I went back into training myself on how to apply market structure. It is a kind of process that I'm using to create a brain muscle memory, if you want, to keep on using it. And especially, I'm only using it now on one time frame. Um, and on sorry on not on one pair, on one currency pair, but on different time frames. So I'm starting with the weekly. What I do is this is on every time frame. What I do is I define the trading range, the upper range and the lower range. And then after that, I wait for it until it crosses the inducement. Then I draw the points of interest, which are order blocks, order flows, or the engineering liquidity. Those are the three types, in addition, of course, to the inducement. Those are the three types. Now, what there is a rule in trading, a general rule in trading using the Fibonacci retracement tool, which is buy in discount and sell in premium. So the premium and discount are the levels above and below the half, the center point, if you want, of the Fibonacci. So the upper area is the premium, the lower area is the discount. So this is a downward structure. So that means we need to buy from here. So the inducement is here, therefore it is not within the premium. So whatever is in the premium is the one to be taken into consideration. But then I realized, because I have now within my risk management rules, the my risk to reward ratio is a fixed one, 1 to 3. So to be able to do that, and I don't want to put my take profit, as the theory says, on the external range, because the stop loss is at this level, um, at this external level, and the in a downward trending range, the stop loss is at the high of the range, and the take profit is at the low of the range. This is when the trade is short and when the market structure is going down. So what we do, sorry, it's not what we do. So what I did because of that, instead of relying on the exact um, point of interest, I decided to use the Fibonacci level 786. So what I would do, as an example, I would take this level as an entry level and then put the stop loss at the height of the range and then choose 1 2 3, and that's it. This is how I take the trade. Why I'm doing that? Because even if the trade is here, and let's move it down to this level here, that means one, that I need to extend my stop loss. Two, my RRR will be very small. Even if I'm not going to do that, I'm just going to do this. Okay. So, well, that is fine actually from an RRR perspective, but from a stop loss, it can very easily, for example, it did touch this level and it was going down, and then it went up again to take other liquidities or other points of interest on the chart. So this would have been a total loss. So this is why, and again, that does not mean that this one is going to be a win for sure, but at least I will be at the height of the range, meaning the loss is a change of character. And this is why I keep it. This is why I keep it in this. This is why I use this rule. Okay, so after I finish from the weekly and deciding on its pinpoint, I ask myself two questions. One, is it reacting from a point of interest? So the Fibonacci is not a point of interest per se. It is the area where I trigger my lower time frames, not necessarily lower, to tell you the truth, where I trigger my trades. But when it comes to the POI reaction and look and analyzing it on other time frames, no, I look at the point of interest itself. So the first question is it reacting from a point of interest? The second question, if the answer is no to the first, is it going towards a point of interest? For example, if we are here and suddenly we saw this move, okay, and we will say, okay, this is the only point of interest we have on the chart, so is it going in that direction? So we go to a lower time frame and trace that movement, okay, on smaller structures. Okay, so now that we're done with this time frame, we move to the daily and we do exactly the same. So we ask the question, is it reacting from a point of interest? So this is the daily inducement. So is it reacting from it? From a price action perspective, no, although I am very weak in price action. I'm not very strong in that. I don't like it a lot as well. So yeah, I try as much as possible to understand it, but I don't think that I really grab the concepts of price action. Although I know that they're very important, but somehow I still didn't grab the concepts well. So is it reacting from this? To me, no. Is it going to another POI? Well, that is not sure as well, because it swept the inducement and now it is below the inducement. So anything can happen. There is nothing that this chart is telling me. So I leave it at that. There is nothing there. We have the Fibonacci 7 8. What was it? 786? Maybe. I forgot. Let's see. Yes, 786. Okay. So also on this chart we have one POI, which is an order block. The other, there is no other order block, and there is no unmitigated order flow. So this is our extreme, let's say. point of interest, unless we want to take this rejection zone as another POI as well. So the Fibonacci POI for the daily as well as the 4 hour, because the 4 hour, as you can see, it has the same trading range. But this is very interesting here. The weekly Fibonacci is lying here. So we are going to see what's going to happen within this area. Sorry. And we move to the 4 hour. Previously, when the price was around here, so I said it's already doing higher lows and higher highs, so it is moving towards the IDM. So I actually took a trade on the 4 hour for that, and it was a good one. But I didn't wait for it until it reaches the inducement. I actually stayed with my fixed 1 to 3 risk to reward ratio. So on the 4 hour, we ask the same thing. Is it reacting from now? Is it reacting from a 4 hour point of interest? And the answer here is no, it's not reacting. Is it going to? Well, we have something interesting here, which is the point of interest of the weekly, as well as we have an order flow of the 4 hour and a daily order block as well, and the daily order block as well. So all these three are happening here, but our structure's point of interest is here. So if we took, let's see, if we took the Fibonacci here, this is the Fibonacci, yes, from here until here. And let's look. Okay, this is exactly between the zero point 0.5 and the 618 on the Fibonacci. So it is within the premium. So we can sell from here actually. So let's say we are selling from here. What is it going to give us? So, and normally the stop loss will be just above the point of interest, which is something that I don't like much. And the to make it 3, I really need to go this way. Okay. Now this is what I don't like about this. Wait. Let me finish this and then continue talking. Okay. This is what I don't like about this, because the stop loss is still inside the range. What I like to have is have the stop loss at the end of the range, so that the loss means a break of structure or a change of character. No, the loss means change of character, not break of structure, because the trade is going with the structure. Okay. So this is a bearish structure, so it's going down. If it breaks it, that means it's a change of character and a change of bias of the structure. So this is why I don't like this behavior, this way of taking trades. This is why I like to take them here. But I watch this and see what the price is doing. Is it going towards that POI? Because if it is going there, then something is going to be triggered. And one of the things that I learned is that what's going to be triggered is a counter trend opportunity, where I can take it from lower time frames. So we can take trades which are going to the POI, and this is against the market structure, against the trend, so counter trend, and opportunities with the market structure, which is a reaction from the POI, and in my case and in my plan area, a reaction from the Fibonacci 786 with the structure. So there are two ways to handle it. Now, all these terms pro trend, counter trend, the point of interest with order flows and order blocks. These are not things that I invented, of course not. I mean, they're out there. But even the plan, it is derived from someone that I learned those techniques from. Now I am developing my own elements. For example, the introducing the Fibonacci 786. This was my idea. It's within my plan. The 1 to 3, the way I put the trade. This is how I am developing the plan to suit my style. But all the basics, all the elements, all the names that I'm saying, those are things that I have learned from someone else. These are not my inventions. Now, what I need to do is that train, if you want, my brain muscle on, could keep on looking at the charts and keep on asking myself, is it reacting or is it going to, is it reacting or is it going to? Because if it is reacting or going to, then I need to go to the lower time frame and see what's happening there. But we will not do in this we will not do this in this video. It's enough for this video to talk about the concept itself and how we are dealing with it. So let me delete this. So this is the concept. This is the let's see, this is the D. Okay. So these are the concepts that I'm dealing with, and this is how what my trading plan depends on. So I go from the weekly with the two questions, and then the daily with the two questions, the 4 hour, and then I move to the 15 minute. Now, going to the 15 minute starts really with the execution. That does not mean that I do not execute trades on the higher time frames. The only reason why I am not executing trades currently on the higher time frames is that I cannot afford them. I can afford only a small amount of distance. I have a 0.5% uh, risk. My balance is very low. Therefore, if only on the Euro USD, if the stop loss distance is around 45 pips, this one I can take only with one micro, so I don't have much. I cannot go to 100 pips. I cannot go even to 50 pips. Well, 50 pips maybe I can. Why? Because my risk range is between 0.5% and 1%, but I try as much as possible to stay within the 5%. I can move to the 6%. Sorry, to the 0.6%, but I am really reluctant to move higher than that to zero point 0.7. Until now, I haven't done it. But in other trials and other tests, I did that. But in this one, in this particular training that I'm training myself on implementing the market structure, no, I haven't. So we'll keep it at this level with these 3 time frames and what we're doing with this. Hopefully next week we will get trading or trade examples where I will show you how I read the market structure and how I'm connecting all those time frames together. So the next video will not be theory. The next video will be more. Even if we don't have trades, I will explain how I use the market structure to see where the price is going. Okay. So currently with the Euro USD, I don't have any idea where it's going. So all the major time frames have 50-50 chance. There is nothing there except maybe on the 4 hour here that this is going to the order to the 4 hour order flow, and we have the weekly POI, so we might have that as a point. So thank you very much, and we'll see what will happen, what we will have for next week. Thank you very much, and see you in the next video. Bye bye.